I've met with two new clients recently who had thousands of dollars sitting in the bank earning nothing. One was a retiree with 100,000 of cash reserves and the other a young saver with about $10,000 saving for an upcoming purchase. That retiree could have earned closer to $3,400 per year and the young saver about $340. Now, that's not life-changing money, but for both of them, that's free money that's sitting on the table. And if you've got cash that's sitting in a savings account, this video might help you get an extra couple thousand or 100 per year. All right, here's what's happening. From the FDIC, we can see that most banks pay almost nothing per year. I'm very surprised that this is actually 0.4% is the average. If you look at a lot of big banks, traditional banks, for example, it might be closer to 0.1% or 0.01%, effectively nothing. But without trying or looking too hard, you can find online banks that pay 3.5% or somewhere in that ballpark, well-established banks with good customer service. And that could turn your $400 of earnings into $3,400 of earnings. And we're not talking about taking a lot of risk here. These can be FDIC-insured banks or credit unions that have similar federal backing. The problem is that most people think they're fine because their money's in a savings account. They think they've done the right thing by putting it there. And that's the sneaky part, is that a savings account at a lot of banks is really just a glorified checking account. The fix here is super easy. You have a few options, but one of them is just to use a high-yield savings account. Typically an online bank, but a lot of local institutions also offer great rates. You probably want to look for that FDIC or NCUA protection, and you don't have to rearrange your whole life and change, where your money goes into and which accounts you pay bills out of, which card numbers are everywhere. You can just use these as an add-on to your existing banking relationship. So you just keep paying your bills the same way, but then you have an additional savings account out there that you transfer money over to when you're not going to use it. Those transfers happen by ACH or automated clearinghouse. It's just an electronic bank-to-bank transfer, and that can be done within 1 to 3 business days. Now, you do want to be careful because if you empty out the big chunk of money from your traditional big bank, you might start getting monthly maintenance fees. So there is some strategy here. Just be mindful of that. So which banks should you use? Well, you can find a lot of great bank accounts at deposit accounts. That's just one place among many on the internet, deposit accounts, all one word, .com. And they list a number of the higher paying banks. And you can see that the rates range from, closer to high 4s, mid 4s on down. And you don't necessarily need the very best rate. The more money you have, the more that rate matters. But just be aware that if you decide to go with whichever bank has the highest rate, there's some likelihood that that's going to change from time to time. So you're not always going to get the highest rate unless you're willing to chase rates and switch banks, which is a lot of rigmarole, and your money might not be earning interest all the time. So if you have 100,000, you can get 3,400 at 3.4%. Let's add a 0.25%, so it's 3.65. You can see that it's an extra $250. Now, if your balance is closer to 10,000, it's $365 versus $340. So that's only a difference of $25 per year. Might or might not be worth the effort to go for that extra 25 basis points. And by the way, to figure all this out on your own, you can just multiply the amount you have in your account, your cash reserves, for example, by the rate, and that'll tell you roughly what you might expect to get in 1 year. There are some other approaches you could use. You can consider CDs. You might look at money market funds, which are technically mutual funds, which are technically not risk-free, like an FDIC-insured bank account. So be sure to understand all of the risks and trade-offs there. And remember, the rates are going to change. So if interest rates are falling, then the rates on these types of accounts are typically going to fall as well, but you're still getting a lot more than you're getting at a traditional big bank. So after this video, take 60 seconds, check and see what your bank is paying you. And if it's basically nothing, then you might want to explore those high yield savings accounts, and you got a lot of great options. I know that's not news to all of you, but this is one of the easiest wins that a lot of people overlook. I hope you found that helpful. If you did, please let me know, and I look forward to talking with you soon.